I really think music as an asset class is going to be kind of
Hmm.
have some great reverberation. I mean, the big institutions and pension funds have already been buying, it's not a new trend at their level. But they go out and buy an entire catalog, right? And of course, we all know Michael Jackson bought the Beatles, which was an incredible
Hmm.
investment. People thought he probably had lost it when he bought it
But then he
initially.
did zero estate planning, and that's the problem. But we can. I digress. Yeah.
Nope.
Welcome to Planning Reimagined, a podcast from the planning experts at Robin Glenn and RX Investment Partners for wealthy families and successful business owners. Hi, I'm Celeste Moya. Welcome to another episode of Planning Reimagined, where your wealth journey meets our expert insights. Today, we kick off our series on family offices, where we're going to take a deep dive into their elite, sophisticated world. So through the series, we're going to unravel their sophisticated framework and give you insights into how they operate, who is using family offices, and just the future and landscape of them. So make sure you stay tuned for the entire series. And today we are honored to be joined by David Friedman, who's partner at Forbes Banister, who is a subsidiary of Forbes, where he leads the family office, luxury, and financial services practice. And David is also just a very much sought after speaker, frequently quoted on media sites like the Wall Street Journal, New York Times, and he's considered one of the world's leading experts authority on the global ultra affluent and high net worth market. So we are just delighted. Thank you so much, David, for joining us today.
My pleasure.
And of course, we also have our very own Kris Stiegel, advanced planning extraordinaire, and no stranger to working with family offices. So we have an elite team here today to talk about the elite family offices. So let's get right into it. David, I think we should start by sharing a little bit more about your background, because that will, and what you're working on these days, because that really lays the foundation for our conversation.
Most people know me because of my background with a company called WealthX, where it was a data company where we pioneered the market around the ultra high net worth. And before that, the ultra affluent and ultra high net worth was kind of a nebulous term, but I think WealthX really put the stake in the ground and kind of created the definition around that. And but what most people don't know is prior to WealthX, I actually worked for one of what I would probably argue one of the first open architecture data aggregation family office platforms in Charlotte, North Carolina, backed as a technology company. So I really cut my teeth, if you will, in the family office space there. And then actually, now that you mention it, going back to my days in Silicon Valley, one of my investors was who had made she was a centimillionaire. She'd made quite a bit of money around optical networking. I ran her foundation, but also I was doing speeches for her, writing her speeches. And one day someone said, "Oh, you're her family office." And I said, "What's that?" I said, "By the way, can somebody get paid for that?"
Yeah.
Anyway, which also kind of underscores the old, anyone in this business knows the maxim: if you've seen one family office, you've seen one family office, right?
Right.
So, we couldn't go the podcast without mentioning any of that. So,
Yeah,
but
absolutely.
WealthX was really got me kind of more submersed and emerged. It really gave me a perch where I could operate and kind of canvas the landscape of multifamily offices, technology, everything surrounding ecosystem around family offices and so forth. So that's been kind of my trajectory, culminating with this most recent transition to Forbes Banister, which is a new venture of Forbes under the Forbes brand. And as you highlighted, my area, one of the verticals I'm focused on is not only staffing within a family office itself, but also across its portfolio companies, et cetera. So bringing kind of a whole scaled platform as well. So yes, that's kind of my background.
Oh, that's great. I mean, incredibly impressive background. Obviously, you have a lot of experience in the family office space. And you mentioned, the family office term not knowing. I can't tell you how many times, and I'm sure, Kris, this has happened to you. I've said the term family office to somebody who's maybe not in our industry, and they just look at me completely confused. And they ask, like, there's a family in an office. I don't understand. Like, can you explain that? So, that's a great kind of way to start, the conversation on family offices. A lot of folks don't know what the term means. And for even for us that know and understand and have worked with family offices, there's so many different types of arrangements in that space. You had actually previously mentioned when we were talking before the recording that there's somewhat of an intellectual battle out there about whether or not family offices actually exist. So let's briefly just start with the basics of David, can you share with us what is a family office? What purpose does it serve? And who needs one?
Yeah, I mean, there's been some counter narratives recently, people saying there is no such thing as a family office. It's kind of a Nietzschean, Descartes deconstruction of the definition of it. In some ways, it's true, right? Because what folks who are saying that or publishing around that, or they're saying it's such an amorphous term and it's all over the place. It's kind of hard to peg it. I mean, what I would say is that it depends on how you define it, right? But what I would do is I'd give you the bookends, right? So at the one side of the spectrum, you've got highly institutionalized family offices that are very much institutions like MSD Capital or Michael Dell Capital's platform, where you've got highly structured, and they're very much so like an institution, whether it's a hedge fund or investment fund, private equity funds, et cetera. So you've got that on the one end. At the very other end, you've got what some people would call more of a virtual family office, which is a family-owned enterprise where when deals come to the family, the controller, the CFO of the business is the one who does the due diligence, right? And so they pull on the infrastructure of that family-owned business to support their family without kind of allocating separately resources or compensation, for example, to those individuals. So they really serve the privately held business, but they're pulled into the family issues and other things as well. So those are kind of at least in my mind, the way I would define you. And so then you could say family offices, you could peg one across that spectrum, right? So, but those are two, at least in my opinion, the two bookends. So, Kris, what would you say?
Yeah, no, I totally agree. I kind of think sometimes, people, families, they have their operating businesses, and then inevitably inside that business, there's people who are doing stuff personally for the family,
Right.
but it's still kind of stuck inside the family operating business. It's like all of a sudden, well, yeah, you have this operating business and it does X, but it's also kind of working like a little family office. And so without even knowing it, they've already kind of formed that foundation, that basis for what, a family office is. But to your point, on the other spectrum where you really have hire specific individuals or companies or other things to go out and do due diligence on investments and deals, and you're really taking an institutional approach to how you're investing all of a sudden, and that's a whole different spectrum of family office. So you're right, there's it's a wide spectrum. People usually fall in the middle, except for the Dells, et cetera, that you pointed out. But yeah, I completely agree with how you defined it.
And from my experience, a lot of them evolve over time. So sometimes
Yeah,
what we
totally.
would classify as a single family office or multi-family office maybe started a different way. Wasn't the intention, and they saw a need. They had friends, they had neighbors, they had clients. I know some financial advisors that have started some to multi-type family offices because they saw the need among their clients. So I think these also change over time. It's not a static thing. I think initially it might have been created to preserve the family values, to maintain a lot of that privacy that, wealthy families like, but that's definitely changed over time. And that's kind of, it takes us to the next thing we wanted to touch on, David. And so we know there's not just one flavor, as you mentioned, family offices, and even the ones that are in the same category, if you want to say that, they're all different. To your point of, if you've seen one family office, you've seen one. So can you talk a little bit about what you're seeing right now in the family office landscape, just in general?
Yeah, I mean, I would say I think you're seeing the rise of the concept and the category more surfacing in the public kind of domain and discourse, right? And financial services, right? So family offices that have been around for centuries, right? You could go back to the Medici. One can make the claim the Medicis were a family office, right? Who were impacting culture and um, in a tremendous way. But then you've got the kind of well-known ones, the J.P. Morgan or the Rothschilds or the Rockefellers, et cetera, that were at least in the U.S. history. So they've been around for a very long time. But recently, I think over the last kind of 5 years or so, we've seen the phrase crop up more at a retail level, And if when I speak at luxury real estate conferences, I often say, kind of, raise your hand if you dealt with a family office. Probably 3, 4, probably 5 years ago, maybe a couple people in the room. But, more recently, over the last year, for example, if I asked that question, I'd say probably 60 or 70% of the people in that room are dealing with a family. And they're not dealing with the principal, they're dealing with kind of an advisor or someone who's a gatekeeper. But they know what the concept is. And so that concept, and most of them, though, are probably not dealing with super institutionalized ones. They're probably dealing with someone that's a centie millionaire, like 100 million or 200 million. But they've gotten that kind of wealth, and now they've got some kind of infrastructure, right? So, I mean, I was on a call a couple recently with a good friend of mine. He's a tech kind of entrepreneur who's had multiple liquidity events, and he asked me the question. He said, "Listen, I have a controller and a portfolio. Is that a family office, right?" Right. So, so he's like, "I just never called it a family office, but for all practical purposes, yeah, it's a family. He's got a dedicated person and a portfolio of private investments." So, but I would say probably one of the biggest trends that has kind of enveloped, the family offices have always been direct, but that's really, if you think, I'm going to make a hyper generalization that's not true for everybody, but in general, I would say most family offices are deployed across direct investments, commercial real estate, and if they have money in liquid, it's in cash because it's dry powder. The liquid portfolio side of what they're doing is completely, the liquid portfolio construction, from an advisor perspective at least, is a very commoditized business. We all know the fees are getting compressed. So family offices, and typically I think the biggest trend is that you see family offices, it starts with family offices and then the trends trickle down to the retail market, right? So and so we'll see, families, we'll see family offices with their direct investments and alternative assets, and that kind of drive, and in portfolio construction will start to drive down more into the retail level. It already is, right? I think that's a big trend. Managing the balance sheet and being able to manage risk across the balance sheet is going to be, even at a family office level today, if you think about all the different performance reporting and data aggregation platforms, the families still have a very hard time in getting a holistic view of the balance sheet. And people say they have it, and they say they have all the data, but there's no silver bullet. There's always gaps. There's no data around it, but I would just, based on anecdotal conversations that I've had, I would argue that probably 30% of all family offices that are above 100 million probably still use Excel. I mean, I think because typically if they're getting a solution, they're still having to dedicate staff around it to be able to configure it, customize it. And so some of them are just like, why? And it doesn't mean they're getting the best out of Excel. It's just easier, right? But you would be shocked at how many conversations I have where people say, we have 50 operating businesses, and we're just rolling up everything into Excel, right? So it's actually, you wouldn't be shocked. It's a reality today of the market. But I think one of the biggest opportunities moving forward with family offices is to really have that holistic view of the balance sheet, because once they have that, then they can really more accurately measure risk around it. So, I'm not saying people don't roll up, operating business information, but there's still always gaps around it. There's no one I've talked to, no family office, who says, yeah, we've got it all covered. Everyone is duct taping or filling in a gap, regardless of what system or solution they have, right? So there's no silver bullet.
Yeah, no, totally. I mean, that's what I've seen as well with a lot of the family offices that I've worked with. Whenever, I ask for information to help build some sort of a plan around what they're trying to accomplish, whether it's, multi-generational planning or whatever it is, inevitably, there's some sort of an Excel file that they're sending over to me with, tons of their financial information. And you're right, they do run it off of those. I think a lot of it starts with, they're looking at a deal or looking at acquiring a company or whatever it is that they're doing. And it all starts, like the analysts all start in Excel. And it just never kind of gets out of that, right? Because that's where they're looking at it. Here's all the economics of the deal. Then they do the deal. And then you have the structure around the deal. And it's all built into the singular spreadsheet, and it's hard to bring that into a system because of the complexities that you have, both on the due diligence side and then on the end on the management side of it. So yeah, sometimes it's easier just to do it in Excel, and we see that it's not maybe not the right and most efficient way to do it long term, but you can see how it happens.
Yeah. Or maybe it is. I don't know. I think it's the. I think I mean, it's funny that we're talking about Excel offices, right? But
this is not an Excel commercial, by the way. But
yeah.
But we do.
I love Excel. I'll throw it out.
Me too.
I think it's a flexibility thing.
Yeah.
Right? I mean, it's a flexibility. It's also, well, how do you measure the performance on the water park that Gen 7 bought, right? Like, where does that go on the balance sheet, and how do you manage that? But so I think this trend. The other thing that I've been, trend that I've been kind of cogitating about and digesting and having conversations about is the rise of this kind of meta risk manager. And it's not risk. I'm not talking about portfolio risk. I'm talking about risk across the entire, every multifamily office typically uses the framework of, hey, we're looking at all different forms of capital within the family, the human capital, which is the family, the intellectual, the financial capital, which is invested across liquid/real estate, et cetera, all the different things. But I think there's a role for someone who sits on top of all and monitors and manages all that risk across the family. Today, that role is there may be someone kind of doing it there's probably someone who's managing like the online digital privacy and the risk around the hiring the staff, but that person's separate than the person looking at the portfolio risk. I think in the future, there's going to be a role. I see the emergence of a chief kind of risk officer role, but it's defined as someone who sits on top of the risk across everything, the balance sheet, the family, everything, not this kind of narrow definition just around the portfolio, right? Which is, if I say risk management, that's the first thing people think about, which is portfolio risk management. But I think there's going to be this role around someone who's the entire balance sheet, including the human capital, which is the family, the grandchildren, and everything, and monitoring and managing that risk. What kind of compensation structure that person has, I don't know. We'll see. But and how the family will, reward them for that. But I think that's something that will happen because more and more we're getting better and better data across the balance sheet. And the ability to monitor it. And if you can manage it, if you can aggregate it, then you can monitor it, then you can manage it, right? And so I think that's another interesting trend. The other big one, obviously, is that families like to invest with each other. So they're looking for platforms that allow them to more easily syndicate, access other families that are experts. They don't want to necessarily work with the PE funds and they don't want to pay fees, right? So that's the other big thing. Family offices don't want to pay fees. And they don't think that they should, and I understand why they say that. So, figuring out where you can provide value to families in a way that they feel like there's value and they're willing to pay for it. I mean, I was with last night. It was the Family Wealth Report Awards, and I caught up with the founders of We Family Office in Miami. They and Mel, who's one of the founders, is a former head of JP Morgan. She also headed up GenSpring. And so she sits on the board of Coke, and she's a power player. But they made it when they launched We Family Office 10 years ago. They said, we're not going to charge a percentage of assets under management for our revenue model. They put a stake in the ground. So they do a set fee. And I think that's where the market's headed, right? So the market is, that's what and I would fan the flames of that trend by saying the new gen of technology wealth that I know. I was with the general partner of a very well-known venture capital fund, and he's younger, but he's on a crusade to abolish percentage-based fees. Whether it's for AUM, liquid portfolio construction and management, or real estate. He just doesn't. I think that his generation, it's in their head, and he and his LPs of his fund, they all kind of are in revolt against that as a model in general. So if you're going after the next gen, and I don't mean next gen by Gen 2, I mean next gen of new wealth, then that's something you need to understand and figure out. You need to understand that mindset, what's behind it, and that's where the puck's headed, by the way. So you're not skating at the puck, you're trying to skate where it's headed, right?
Yeah.
So I think that's a big trend. But figuring out like how to monetize your value proposition to a family office is not easy. I mean, so but I think like Kris and Tom and you guys at your firm, this notion of integrated planning, the holistic integration is a huge value add, right? And providing that in a holistic way, in a holistic view. So, but those are some of the things that I see.
That's a lot. Yeah, that's great. That's a lot of good information. I want to backtrack on something you said, because this is something I've seen to be a really big risk with family offices. You talked about this potential role of a chief risk officer. I'll give you an example of a family office I've worked with in the past where they're very affluent, significant size family office, 3 different generations at this point. And there's one accountant that on an Excel spreadsheet, because he has told us that, manages everything. He's getting up in age too, maybe, likes to eat maybe the hamburgers, all the things, right? So something could happen to him there. And he truly knows every single aspect of their business. If something was to happen to him, not only is his Excel spreadsheet password protected, and I don't think anybody has it, he is a crucial person to the firm, to the family office. And we've mentioned that, and I just don't know that they fully comprehend the amount of risk that they're putting on one person. So, you mentioned the risk around people. Can you kind of expand on that, like what you're seeing there?
Well, so what you just said though is interesting, because I had another call with another family office recently, and we were talking about how to better manage risk around these issues you just talked about, because everything's on an Excel spreadsheet. But he put it in a fascinating way. He said if it might increase productivity by 90%, but if it decreases security by 1, then they won't do it. So the ratio so subconsciously, that family you just talked about, may feel there's probably a perception around more being safe because that one person only has the password. So they haven't felt the pain yet.
Yep.
Of if something happened to him and then no one can get access to any of the information, and the amount of friction that will create, like over the next 3 years, to trying to unwind and figure out where things are and all those things. So that there's no friction right now. There's no pain.
Right.
And so the illusion, not the illusion, it's pretty secure, right? Because the reality is, if you look at all the data around, cybersecurity and everything, the number one reason that things happen in fraud and so forth is it's a social engineering issue. It's a people issue. It's not a technology issue. It's getting in, because typically that's really the issue, the big challenge, right? So if you got only one person, that has the password, it's that's probably one of the most safe and secure from a cybersecurity perspective that you can have, but the risk is so much more. So educating families on that in a way that helps them navigate and think about and measure that risk in a concrete way before there's an issue, because until they feel the pain, it's just an intellectual exercise, and that guy's eating another hamburger and he's going to be around for a long time.
Hopefully. I really do hope he's around he's a great guy too.
But that's exactly the issue, right? And in case, there's I'm an early advisory board member and equity holder of a technology platform called Connect. And one of the great things about Connect is you can put in different rules. For example, so if someone passes away, it automatically opens up the trust documents, right? So it creates those abilities to create those avenues and manage critical family and data and information, across the family, and everybody controls their own part of the family and their own part of their data, right? So they can so I think those things are important, but there's always questions. I mean, listen, status with a family office, status quo is always going to be the hardest thing in terms of creating some type of momentum or change, right? So
Yeah, absolutely. Kris, you had something to say.
Yeah, no, for sure. And everything makes total sense there. There is that opportunity to try to educate the family on the risks that exist with this one singular person. You're right. There's always going to be friction there because you're right. They don't want to disrupt anything by trying to change something that somebody's doing. But isn't that also an interesting opportunity to bring family members into the business and educate them on how everything works by having members of the family come in as part of that risk management team and really try to get in the nuts and bolts of how things work? Are you seeing anything in that as like a possible way to help mitigate some of that risk by bringing those family members in for that purpose?
one would think, I mean, yeah, one would think and hope, right? I mean, I just had a call with someone who's kind of managing entire portfolio for a single family office. And we were talking about how, internally positioning himself in this kind of role because no one's doing it. And it's a great opportunity to really help the family. And I do think it's right. I think it has to be done in the right way, right? It depends on the family. It depends on the relationship the siblings have. It depends on so much. If the siblings aren't great and they're battling, the patriarch is putting them at war against each other to see who's going to survive the Hunger Game.
It's not going to work. Total failure.
Family office Hunger Games to see who takes over the company. It's not, that doesn't work well, So, and some of them probably maybe check. It depends, right? It really depends.
And unfortunately, not every family member suited, right? Also,
yeah. I mean, one would think that saying, "Listen, this is a better way to manage risk," but I mean, when it comes to family office, I mean, people, and in general, people don't operate off of reason or rationality typically, right? I mean,
no, that's not true.
It's reactionary.
It's Simon Sinek. It's the Olympic part of the brain. People are motivated by their emotions and they make decisions, and then they use the data and everything else to rationalize it, right? So the short answer is yes. It would be great if everyone's like, yeah, we need to manage risk around this, and let's all get together and do it. But it doesn't ever play out that way, right?
Yeah, no, that makes perfect sense. Something else that you touched on was, family offices investing in new different asset classes, kind of leading the way for the rest of the market. So what types of new asset classes are you seeing family offices investing in, and why? What's important to them these days in the investment space?
Yeah, it's good. I mean, listen, I'm a big fan of, I really think music as an asset class is going to be kind of have some great reverberation. I mean, the big institutions and pension funds have already been buying, it's not a new trend at their level. But they go out and buy an entire catalog, right? And of course, we all know Michael Jackson bought the Beatles, which was an incredible investment. People thought he probably had lost it when he bought it initially.
But then he did zero estate planning, and that's the problem. But I digress. Yeah.
Oh, right.
Yeah.
It's true. I mean, a lot of the, but the concept of music as an investment class is not new. The pension funds and institutions and the bigger, and the more institutionalized family offices have been doing it for, probably 10 years, right? Where it will get interesting, though, is I think where it trickles down into the retail market, because it really represents the mixture of a passion with a return, right? So, by the way, it's a non-correlated asset. When the economy goes down, people listen to more music, right? So, and it's really like a bond. But I do think there's the emergence of music and fractionalization of things like horse races, and there's a company in New York called Luxus that's doing, an IPO offering around the Tiara by Garrard, right? So there's these Reg A and D offerings that are happening that are assets that represent the intersection of passion that will bring in a new generation of investors who are not just doing it because their advisor said you should have a 40-60 portfolio of bonds and equity, like. And these things will be in a room where you invest. So I think there's going to be this convergence of passion assets with experiential investing that's going to explode and happen, that will bring in a new generation of investors and involve them more. It's like betting. Like, you can go and hypothetically bet on a horse at a race, but if you have real money, then it changes the dynamic, right? So I think the ability to say, well, I'll have the Katy Perry ETF, or I'll have the Kate Bush, whatever it is, right? Or Madonna, or the ability to kind of align what you're doing. So people are already doing that from a ESG perspective. I think it's going to happen around passion as well. And I think when you have that availability, and it always starts at the institutional level and the family office level, right? And then it'll trickle down to the RIAs and to the rest of it. I mean, I think I forgot who just bought a huge, it might have been Blackstone, just bought a massive music platform, right?
They buy everything. So that would not surprise me.
Yeah. So that's one big. The other big one is the tokenization of the real world. So Blackstone is betting on the $10 trillion tokenization of real assets. So I see that as a big. I'm on the advisory board of a company called Ivinson, and they are doing tokenization around assets like yachts and things using blockchain. It's STO offerings. It's more about. So if you think about blockchain as, and let me just be clear, I'm not talking about cryptocurrency. That's a whole different world, and I'm not commenting on that. I'm focusing on blockchain as a way. If you're a owner of a yacht and you have to do registration with a marina and you're traveling all over the world, I do believe that blockchain and also in terms of passing that down to the next generation in different ways, I do believe blockchain could be a really interesting platform for ownership of luxury assets, and then also offering another family the ability to participate or own a part of a luxury asset, right? So I do think that it will create transparency and longevity. We're just starting to see this, right? So, but I think it could happen. I think registration, for example, on these assets is important, and the ability to quickly, go through a registration process with a marina or a jurisdiction around a luxury asset, whether it's a yacht or a plane, for example. So, and then Ivans is actually doing something really interesting, which is if you know much about yachts, the design process is super involved. So they're allowing you to buy the design you create and own it on the blockchain. So you can either then go pass that on and get it constructed, or you can sell it to someone else. But owning that IP around the design is important, because the design process is so involved and it's so sacred actually for a yacht owner as they go through that process. So I think that's an interesting play around blockchain that I don't think not many people are really talking about it that way, but that I see that as a really interesting way for, and especially, for example, if there's a family office that I've been talking to recently is doing a 100-year land lease around a very large real estate development. So blockchain is perfect for a 100-year land lease. I mean, if you think about that document and the longevity and the legacy for the family, that's a great way to track it, have an audit trail. And all of a sudden, think about it, wonder if everyone, Gen 1 through 7 or Gen 1 through 5 for whatever disappeared, and all of a sudden Gen 7's like, where's the land lease? It's there on the blockchain, right?
It's on the blockchain.
Yeah. So I think the blockchain is going to be perfect for those kind of smart contracts, also for P&C policies and life insurance. And there's been a lot of talk about it, but I think it's happening now.
That's interesting. The whole passion investing, that's definitely different. And you talked about newer generations, and not just, as you mentioned, newer generations as far as 6th, 7th generation of wealth, but newer money, people that have created their wealth perhaps in the IT space in the past few years. Now AI is making a ton of millionaires and billionaires out there too. You talked about transparency, and that's something that I've seen with the younger generations, is that transparency seems to be more important to them. Not that it wasn't for their parents and grandparents, but that's something they really want to see. So what are you, as far as these newer generations, both of multi-generational wealth and those that are just newer to having this level of wealth, what are you seeing what else is important to them? What are they doing differently now than their parents, grandparents did before, specific to the family office space?
I think they are focused on experiences, not assets. And their life, I think the future for them is subscription based. So whether it's wealth management, like houses, that's the mindset and the way that they operate. They'd much rather spend money on an experience than they would on an asset, right? Mm-hmm. Typically, I would say. And so the experiential investing, I think, will be huge for that group of investors in rising wealth. And you're right, transparency. I mean, it's really interesting, right? Think about it today. Most people don't have a full kind of registration or transparency around the fees around their assets. I do think, for example, that's one area, if you think about blockchain, where everything has to be transparent, like everything's there. Yep. And it has to be recorded. So, that's just from a fee perspective. But I said that this next generation will be assetless. They're not focused on assets. They're more focused on experiences. And I think it was BlackRock or Blackstone bought, I don't know how many houses over the past. I think it would make sense to me that you pay an annual subscription, or pay a monthly subscription. And if you need to flex up or down, like you flex up because you have a kid, they graduate, now you need to flex down.
There you go, a new business model.
It's and their life is Pandora, Spotify, Apple. Their whole life is subscription based. It's just how they're marinated in my kids, right? Too, right? Yeah. They're marinated in that process. It's part of their DNA.
I just heard of an interesting model in the apartment space. That you say that is interesting, and this was actually from a daughter of somebody who is in a family office. She was talking about it on social media. Where she wants to travel. She's recently divorced, just wants to travel, doesn't want to be tied to any one place. And there's something called a standby apartment where you subscribe to this company and you can go and stay in apartments until they get filled by the next person that wants to live there for 6 months, a year, whatever. So they're just kind of taking it up for certain periods of time, but they're doing it all over the world. I mean, it's great for somebody that can just do that, right? Pick up and go whenever they want. But to your point, very much focused on the experience of it versus owning something. In the past, our parents were big on, you have to have a house, you have to have real estate, you have to have assets, and important. But it seems like that's very much transitioning in the next generation. So that's so interesting that you share that.
Yeah, I think it is. I mean, the other thing that's really interesting is the rise of private clubs. So there's been a resurgence of physical private clubs, which I think reflects the desire for these groups to be, one, to have privacy, but also the drive for physical relationship, and for in a world where we're connected, but we're not really connected. We're in a meaningful way, if you would, from social media perspective, right? And also where you're trying to have privacy, right? So, Casa Cipriani, I think, just is trying to raise $500 million to go global. There's a proliferation of physical clubs in New York are incredible. I mean, there's so many new clubs that are popping up, and so I think that's a signal or a sign of a driver that's happening among these groups, right? One interesting thing that is more of a failure or misfire has been the growth of investment clubs, right? So there's been a graveyard of companies, strategies, people who've tried to put together these platforms for family offices to co-invest together. And most of them have been unsuccessful. It's a challenge, frankly. The concept and the concept is right, and because they do want to do business together, but for some reason, no one's really been able to get that model. I think in a way that works. It's more fragmented. Smaller groups do it, and that works, but in a scaled way, it hasn't really worked. So no one's really cracked that nut on building a platform for families to do direct deals at a scaled way. There's a lot of smaller kind of archipelago versions all over, fragmented. But no one owns that market.
Yeah, that's super interesting just to think about how it's all evolving. Kind of to wrap up our conversation, this has been great. We also can't keep you here forever. We could probably talk to you all day, but we're not going to do that to you. So, what to you, David, and everything you're seeing, they're traveling, the conferences, what do you see as kind of the biggest challenge to if it's preserving or keeping the family office kind of style, whether it's a true family office or not? What do you see as their biggest challenge going forward?
It's a great question. It's hard because as we said, like every family is different, right?
Right.
I mean, I think the other, if I can rephrase it, I would say what keeps these families up at night, and
Yeah.
the biggest
Great.
challenge is always it's the intergenerational thing, right? Which is the first generation makes it. The second, how do you raise and position them in a way to take the reins? I think that's what's most prevalent on the first gen's, mind, right?
Mm-hmm.
In terms of the biggest challenge they see. It also actually is the biggest challenge because if the goal is intergenerational wealth, I think that's probably one of the biggest challenges. It's also one of the hardest things to do, right? Because if you have a patriarch or matriarch and they haven't been able to equip their children in the right way or position them, or that's just that's more of that's not a science, that's art, right? That's family.
Absolutely. Yeah.
So that's very hard to do, especially if in most cases the matriarch or the patriarch has spent their entire career driving and building a company, and they have neglected their family and kids. They've in many cases might have even ostracized them, and the control that they had to leverage to create that business overpours into the way that they manage the family, thus exacerbating the relationship with the kids, right? So this is a standard narrative. This is not,
Yeah.
and so that creates a challenging dynamic. And in this, everybody in this market would tell you that. So I think how do you create longevity in a way that empowers your children is probably always going to be the biggest challenge. It's not the market because you can't control that. It's not the business because they've gotten to where they are by being successful and understanding that, right? So the family dynamics, I think, is the core, the biggest, and the human capital side
Mm-hmm.
is always going to be probably the biggest challenge. I mean, this fascinating. This one family that's doing these 100-year leases because that's a source of income that will always be there. Now, there's challenges with that as well, right? With creating income that's always there where you don't have to earn it. So, I mean, there was a family that I was very close to many years ago, and the patriarch of that family, and they very successful in California, and but his philosophy for his kids was may the last check bounce. So the notion was there would be nothing left for the Gen 2. They would spend it all. There were things that were taken care of, like all the education. They could sit on the family foundation, but the drive, the philosophy he created was the last check was going to bounce. So they knew there was they never had the expectation that was going to be there, right?
At least they knew. How many times people go into it not knowing, right? But little selfish plug here. Our previous episode was actually with a person who focuses on that legacy planning, intergenerational planning. It's the non-financial side of family planning.
It's a
So for our
non-financial.
audience, make sure to check it out because that is a struggle across all families. It doesn't matter what their family
Yeah.
office looks like. That is a family struggle, even across net worth, right? So, David, thank
Yeah.
you so much. This has
Yeah.
been great. I feel like you've shared so many great just pieces of information. I knew you would with your incredible background, but before we, wrap up for today, can you share how people can connect with you for more of your insights?
Sure. You can, that's a great, I mean, you can always contact you guys and get my contact information if anybody wants to reach out to me, but you can always find me on LinkedIn. You can type in my name, David Friedman, and then you can type in Forbes Banister or WealthX, and I should pop up. There are a lot of David Friedman, so you guys
we'll make sure to put your information, your LinkedIn information in our show notes. So
that'd be great.
Thank you again, Kris, as always. Thank you for being my partner in crime on these podcasts. Always great to share the mic with you, so appreciate that.
Absolutely. Thank you.
Thank you all for joining us today. That's a wrap on our journey today on this intro on family offices. So whether you need a family office or not, just remember that having wealth isn't just about having it, but it's also about handling it wisely. So make sure you check out our show notes for more details, for links of resources. Please like, subscribe. If you like what you've heard today, please also share our podcast. So thanks again for joining us for another episode of Planning Reimagined, where your wealth journey meets our expert insights. See you in the next episode. Thanks for listening. Don't forget to like and subscribe, and please be sure to follow on your favorite podcast player. To connect with us, you can email us at hello@robinglenn.com or schedule some time with us via the link in the show notes. You can also find us on Instagram and TikTok at Hello Robin Glenn.